Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market update. Hope everybody had a beautiful day. And in today's markets, guys, a little bit of green. Sideways green, but green nonetheless. Helps a little bit after two last days of red, that's for sure. So in today's action, guys, not much in the form of news. We did have an ISM services report that came out for us to be able to gauge how is the services sector doing. Are the prices and for services going up? Are they going down? And is the industry as a whole healthy? So we'll take a look at that report. It came out early on in the morning, and the markets actually reacted nicely to it around the 10 a.m. mark. You can see our bulls are trying to shape up for the hourly trend change, trying to get our little daily bounce underway. So in today's video, guys, we're going to be taking a look at that ISM services report. We're also going to take a look at some of the key elements that Fed members were talking about today. As a quick reminder here, guys, we have a boatload of Fed members speaking this week. As a matter of fact, the entire Federal Reserve Committee will be speaking at a certain point this week. We've already had a few members so far in the last couple of days, and it will continue tomorrow. As you can see, guys, about 6-7 Fed members speaking on Thursday. And then on Friday, we do have a couple more to wrap things up. Jerome Powell actually spoke today as well. So we'll take a look at some of the comments by most of your Fed members and Jerome Powell today too. After that, we're going to take a look at technical analysis and do our major rundowns in terms of our market indexes and in terms of our big tech names, see how things are shaping up there. And lastly, take a look at a few trade ideas that I've lined up for you guys and a couple of trades that I took myself today. So without further ado, guys, let's get right into today's video. SPY up 0.11%, QQQ up nicely 0.22%, but financials and healthcare lagging behind ever so slightly. That's okay though. They've been on really significant rallies to the upside over the past couple of weeks. So if they decide to take a little breather, we need to see that continued bullish rotation into QQQ. And today seems to be a somewhat of a start to that rotation. So take a look at the heat map here, guys. As a whole, the markets were very healthy. Sorry, that's the year-to-date performance. So you can still see that today the markets were relatively healthy. We did have a few drop-offs here in the term of Microsoft and NVIDIA, but for the large part, your big tech names did do some good performance on the day today. Healthcare lagging a bit behind, financials lagging a bit behind as well. And the bottom half of the market really kind of mixed here, guys. So it really was a day of pretty much flat action. As you can see, half of your market participants were down and the other half were green. Not enough to derive a trend that the bulls are fully back, in the driver's seat just yet. On the one-day relative, you can see that mixed action across most sectors here led the day to the upside, basic materials, energy, and industrials. And to the downside, well, you have healthcare, utilities, and some consumer defensive stocks as well. As a whole, guys, fairly mixed day, if I have to admit myself. Really hasn't been much action, has there, right? Really been sideways here on SPY for a better part of the last month. That's a stark contrast from the tremendous rally that we've had, right? We're kind of really stuck in this 520 range on SPY, and even QQQ really hasn't done much for the entirety of the month of March and even the beginning of April as well, really just staying flat within this range at the top. But sideways consolidation, guys, is not bad. Sideways consolidation, as a matter of fact, is good. If the markets can accumulate positions at these higher levels without dropping too much, it just shows you that there's much needed intra-sector rotation. We took a look last week at the market breadth. So how wide is market participation right now? And as a whole, guys, it is indeed very good. This is why I had the year-to-date performance up on the heat map. You can see that really not much has been left behind in the year-to-date rallies, right? Only a few key names are remaining red. Major names, Apple, Adobe, Intel, obviously down 20% as well. Tesla really not doing too well. They're still the S&P 500's worst performer across the year. But for the most part, guys, it has been a fairly broad market rally as a whole. So to see some continued rotation here at the tops, markets not really selling off a cliff just yet, right? Even on the SPY, everything's still looking relatively healthy. So as a whole, guys, I mean, sideways for now is good. Just means that the market is just currently still awaiting data. Keep in mind that we do have a big earnings season coming up in the next 3 to 4 weeks. Your financials, the big banks, will be starting that off. And then our first tech earnings will be, as usual, Netflix and Tesla. And that really all happens in the week of roughly April 15th. So really just about 2 weeks from now. It seems as though we just ended last earnings season, maybe about a week and a half ago. I was still doing earnings recaps on the channel, and they're going to start again very, very shortly here. So we're looking forward to see that earnings season as a whole. Now, let's take a look at, guys, what exactly happened today. So we're going to pull up some headlines from the markets. Dow closes lower for a third day as stocks' second quarter woes continue. However, despite this headline, guys, it was really not that bad of a day. Let's take a look at some of the key highlights of the day here. So higher rates continued to weigh on stocks. That's no secret. We've been talking about that for the last couple of days and the last pretty much month and a half at this point. The narrative has not changed from higher for longer. So higher rates continue to weigh on stocks. ADP data released Wednesday showed private payrolls grew more than expected in March. This was a jobs report today. The jobs report actually came out fairly bullish. You can see here, we've been having pretty much over the course of this week a few bullish jobs reports at this point. Yesterday, we had the JOLTS jobs openings. I didn't really cover it much on the channel, but that came in better than expected. So shows that the jobs openings, how many jobs are available in the market, are still healthy, right? Still creating new jobs. And now we actually had the ADP employment change. So this is a gauge of the private sector jobs market. How many people have been employed in the private sector? And as you can see, the expectation for the day, the consensus was pretty much 148,000, and we did create 184,000 jobs. So the jobs report was positive, but as we've been talking about, guys, it has somewhat of a negative effect on the markets. Why? Because we know that if the economy stays healthy, the jobs market stays healthy, and inflation keeps trickling down, well, the Federal Reserve doesn't really feel the need to drop interest rates very fast. So if the jobs reports keep coming in good and GDP data, such as we saw last week, keeps coming in good, it just reinforces higher for longer, unfortunately. And that's just something that the market is starting to get used to more and more nowadays. So it offered another sign of resiliency in the economy as investors grow increasingly concerned about the path of interest rate cuts from the Federal Reserve, what we were just talking about, right? So Fed officials also threw cold water on the possibility of rates coming down sooner rather than later. This is talking about what a few of your Federal Reserve members said today. So take a look. Atlanta Fed President Raphael Bostic told CNBC Wednesday morning he only sees one move lower this year, sometime in the fourth quarter. Now, Mr. Bostic is always one of your more bearish people on the Federal Reserve. He's been maintaining now, guys, if you don't know him very well, he's been saying for the past year, higher for longer, and he's one of your larger hawks on the Fed. So I was not surprised for him to say one cut. He's pretty much maintained that stance now for the last 3-4 months at this point. So no change there. But here comes Jerome Powell. Wednesday, Fed Chair Jerome Powell said in the afternoon that the central bank needs more evidence of easing inflation before lowering the cost of borrowing money. So Jerome Powell has really been speaking to us 3 times over the last 2 weeks, and his tone has not changed. He just keeps saying the exact same thing. Here are a few of the comments that I highlighted from his speech today that he gave at Stanford, the Stanford Business University, when he was taking a bit of a Q&A session. So here it is. Here's Jerome Powell talking about inflation. On inflation, it is too soon to say whether the recent readings, talking about January and February, hotter than expected, represent more than just a bump. We do not expect that it will be appropriate to lower our policy rate until we have greater confidence that inflation is moving sustainably down towards 2%. This is pretty much a memorized speech from Powell at this point for the past 3-4 months. Really hasn't changed this thought process at all. Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decisions on policy. Once again, being data dependent, so really nothing has changed there. Reiterating the fact that we're on a bumpy path, right? So inflation may not trend directly down to 2%. It may be a little bit of a bumpy path down to 2%, but it's still moving in the right direction. And here's a last quote that I have prepared for you guys from Powell. Recent readings on both job gains and inflation have come in higher than expected, talking about January and February, which we covered on the channel. The recent data do not, however, materially change the overall picture, which continues to be one of solid growth, a strong but rebalancing labor market, and inflation moving down towards 2% on a sometimes bumpy path. So Jerome Powell really just telling us the same things that we already knew, right? Economy strong, jobs market strong, and inflation, although on a bumpy path, is on the road down to 2%. So nothing of the most recent data has changed their opinions on that. Now, Fed Funds future trading data suggests a 62% probability of a cut at the June gathering. Still not high enough to guarantee June, right? If it's not June, a lot of people are thinking most likely July. Now, here's a quote that's said by by a chief investment officer at BMO Wealth, Young-Yu Ma. He said that the invincible stock market of the past 5 months is the exception, not the norm. That is very true. It is certainly possible that the Goldilocks narrative of high growth and falling inflation could return within a couple of months. But it's also possible to have choppier markets that take time to digest its recent gains and allow fundamentals to catch up with valuations. That is a reflection pretty much. That's exactly a beautiful quote to describe our sideways action right now on SPY and also on QQQ, right? Keep in mind, guys, after last earnings season, we had tremendous increases by a lot of large tech companies. A few that come to mind: Amazon, huge gap up after earnings, and then kind of maintain that same range for a considerable amount of time. Netflix as well, huge jump up after earnings, and then kind of just grinding higher here. Meta as well, Meta, huge jump up after earnings, and kind of maintaining roughly flat. And then our last one, of course, is going to be NVIDIA. NVIDIA had great earnings, moved up a ton. Now it's just been pretty much consolidating for the entirety of the month of March. So is it possible that we're just kind of allowing the markets to move sideways as we catch up to valuation and as traders price in the impacts of the upcoming earnings season? It's very possible. What companies will need to do in the next earnings season, guys, is justify that all of these price increases in your stocks are warranted. And how do they justify that? They need to continue to show improvements in revenue growth, improvements in EPS, and improvements in bottom line net margins, and also at a certain point, improvements in free cash flow. If they can do all those things, it will show that large tech stocks and other stocks as well are still growing in spite of high interest rates, and that will give the market a little bit more confidence to continue gaining the levels, in my opinion. So that was just a quick little recap here, guys, on what comments were said by the Federal Reserve members. As I've said in Monday's video and Tuesday's video as well, the rest of the Fed members speaking, I do believe they will reiterate exactly what we've heard from the rest of our Fed members, basically that we will be having interest rates, but that interest rate cuts later on in the year, but that they're going to maintain a data dependent stance, and they're not in any urgency. They don't feel any urgency, rather, to start decreasing interest rates right away. So the first one is still on the table for roughly June and July. That is the expectation from most of your Fed members so far. Now, we did have another little piece of information here that came out early on in the morning, which is your ISM services. This just tracks how healthy your services market is as a whole, the industry, right? And what you want to see here, guys, is considering the fact that services was a major component of inflation in the past 3-4 months, goods inflation is really, really down. As a matter of fact, a lot of goods are in disinflation right now. The sticky component remains services. So this report is obviously very important because it touches upon the only remaining sticky element of inflation. And we're going to go over this very quickly, guys. I'm just going to show you. I'm not going to go read through all the data. The most important part here is prices. Are prices of services coming down? And that is viewed right here. As you can see, guys, right, we came in at a 5.2% decline from February to March. That is very, very, very good. The reading in the reading in February was slightly high at about 58.6. So to pull back a full 5.2% on services pricing reiterates a narrative that we were talking about on the channel when we got this data back in January and February. Now, services companies such as auto insurance or companies that have annual billing cycles, for example, Medicare services as well are like that too. So these companies usually do price increases at the beginning of a calendar year and then maintain those prices flat for the rest of the year. So apparently January and February would be that time where you see most of the significant price increases in a lot of service companies. So we were looking to the month of March to see if that was the actual factor behind a lot of your services price increases in January and February, or would they continue on a slight uptrend for the rest of the year, right? Well, as we can see, guys, it was just seasonality. They've now come down significantly, about 5.2% versus the February read. So I largely think that our, early year increase in services is pretty much behind us at this point. At this point, guys, the data does suggest that the moves forward should be relatively streamlined and that we should really be going back to pre-pandemic levels of services growth. In other words, services inflation will continue slowly downtrending over the course of the year. So looking forward to that. So with all that data out of the way, guys, let's get right into our market analysis here. And not much has changed because we really haven't had much action in the past few weeks, have we, right? So on the SPY, we can see that we are still in the context of a newfound daily downtrend. We are reacting nicely from this green box of support, which I've highlighted here. That is about 517 down to about 508 at the lowest. And we are maintaining above the trend line right here as well. So what we need to see from the bulls is exactly what they started manifesting this morning. Now, what we need to see is a little bit of an hourly uptrend shift. Hourly uptrend shift will mean that your daily uptrend or your daily leg higher is started to move. And at that point, we need to get as high as possible towards our previous all-time high all the way up here, guys, to about the 524 range. If we can really get, close to this range, it gives the bulls enough space to either engulf or at least do the two-step recapture here of your daily uptrend. As of now, your daily bears are still in short-term control, but the bulls are trying to mount a little bit of counterattack here. So we're going to give them time for that to play out. No red flags on the SPY just yet. The red flags do really start if we lose the trend line in a significant fashion, retest it to the upside, and then lose this whole support area below the 508.50. Now that would be a significant daily downtrend, significant loss of your trend line, and we would expect further continued weekly consolidation after that in the context, guys, of obviously a beautiful weekly uptrend as a whole. So as of now, no real red flags on the S&P 500 just yet. Moving on to QQQ. Now, QQQ as well. So what I wanted to say as well, guys, we did a huge bearish thesis video yesterday, where we outlined the narratives behind the bear thesis and what we would need to see for any one of those catalysts to really start driving down the market. So if you haven't seen that, it's in yesterday's video. I spent roughly the first 15-20 minutes of the video talking about that. So I just wanted to make that clear. If ever you haven't seen it, go back and watch that because it was a bit of an extended analysis, right? And I can't really do that every single video, because it would just be too long, right? But essentially what we were saying is the loss of these trend lines, even if it does happen, it's really not that bad as a whole. If you go back to even to the best bull markets, right? You can see sometimes we were pretty much trending within certain upper and lower bounds, and then we would kind of lose that trend just to then reset it later on a different vector, if you will, right? So these trends, even if we can lose them sometimes, right? We can just flush them potentially and then just regain a trend, but the trend channel obviously will be different, and you can see that readjusting all the time. So I don't put too much weight on the loss of the trend line. What I really put emphasis on is the loss of the higher high, higher low, higher high patterns, right? Because if we lose that, then we would lose the weekly into a weekly downtrend, and that would be a break of your lows right here. That would be notable to us. That would signify that we are in for potentially a month's worth of consolidation to the downside. So just keep that in mind here, guys. We really focus on higher high, higher low structure more than anything on the channel. So even if we do break this trend, even if we do break this trending channel here for a minute, it's not that it doesn't signify that the market's going to fall off a cliff. We could very well just trend sideways outside of this channel, and until we would lose this lower area, there still would really be no red flags. It would just be sideways consolidation in a big range, right? So just keep that in mind. Now we are still in the context of a daily downtrend right here. The bulls are reacting nicely from the area of support that I drew on the chart right here. That's roughly 439 all the way down to about 432. So we do still have support, even though we are in a little bit of a daily downtrend. We're below the moving averages. We're below the lower bound of our trend line. It's just not that negative as of yet here, guys. The bulls still do have a lot of area down here that they can pull into to accumulate and potentially mount another rally right here. But on the short-term timeframes for the day, we were looking really good, as a matter of fact, right? Trying to reset into a hourly uptrend. And once we regain that hourly uptrend here, guys, keep in mind, we really haven't had an hourly uptrend since the start of the sell-off, pretty much, that started manifesting last Thursday, right? So this would be your first attempt at regaining the hourly, and that would signal that a daily bounce is underway. And at that point, when your daily bounce is underway, well, we have to focus on the most recent lower highs, and those are right there, 447. So if we can get as high as possible in relation to 447, you set up the engulfing move, or you can maybe set up the two-step process of regaining this daily uptrend. So looking forward to that. As of now, though, guys, No real red flags except for the loss of the trend line here. We're still, really dipping into our support area. So the bulls have not lost control on your longer term time frames, such as the weekly just yet. So everything's still looking fairly decent, despite the fact that we've been kind of really sideways for a better part of the last month of trading, right? Now, moving on to XLF financials. XLF financials not looking too bad, despite their little drop today of 0.05%, right? Still just looking for a daily higher low, still above our 12 EMA. Look how well the bulls have defended this 12 EMA on financials since the 5-month rally began. So still in a daily uptrend. The red flags only happen if we lose 41.25. Loss of 41.25 would be a loss of this daily uptrend, and it would set the bears up for an attempt at a daily downtrend. If they get it, then we would be heading into weekly consolidation. So far, no signs of that just yet. Still looking for a daily higher low, anything above 41.20. Daily higher low for further trend continuation, and we are still above this red zone of consolidation. It was previous all-time high resistance, so the bulls are now using this entire area as support. It's not going to be very easy for the bears to get through that unless we really have a broad market extended sell-off. So financials looking fairly decent, if I do say so myself, excuse me. Now moving on to healthcare. So healthcare, after yesterday's heck of a drop, well, the bulls still not able to recover. Healthcare still down about 0.11% on the day. So what we're going to be on the watch for here, guys, is, as we were saying yesterday, right, this big area of support designated by this yellow line right here now is proving to be challenging for the bulls because it's resistance since we're under the price. And since we're also below our moving averages, we haven't been below both of our moving averages here, guys, in the past 4 or 5 months of rally. So it is notable to us. The bears are potentially setting up now for a lower high into lower low. That would be daily downtrend, and healthcare really hasn't had a daily downtrend since early part of January, right? So it would be notable to us if that happens. The downside levels, if that happens, we're expecting to touch first is going to be the 142, this yellow dotted line right here. It's the previous area of all-time highs. Should represent a decent area of support. With that being said, if the week does close like this, guys, it would be a weekly downtrend. And healthcare has not had a weekly downtrend since the sell-off last fall. And this would be the first of all of your major indices that would actually be in a confirmed weekly downtrend. So it would be notable to us. Is it enough to derail the entire markets? No. As long as financials and QQQ can hold up, relatively flat or even to the upside, then healthcare can do its little consolidation if it wants to. And then to the flip side, once it's done consolidating, this is the best case scenario. If healthcare consolidates first and XLF and QQQ maintain flat or up, that'll be healthy for SPY. And then when XLV is done consolidating, then we can maybe see some consolidation in either financials or QQQ and just keep the rotation alive. As long as one or two of these major sectors is still maintaining flat or to the upside, your SPY will not fall off a cliff. To fall off a cliff, you really need to see all three of these major sectors hitting the lows of the day simultaneously for days in a row. Then you know the move by the bears is real. Anything other than that is just healthy rotation within the market. Now moving on to IWM Russell. IWM Russell not looking too bad at all. Nice recovery today, 0.66%. After starting the days at the lows, we really ended towards the highs here. Now, we are still in a loss of the daily uptrend. So the bulls had the daily uptrend. We flushed these lows right here. Now the loss of the daily uptrend is real. And now we are looking for maybe a lower high into lower low scenario at this point. If we do get the daily downtrend underway, it would just be very healthy weekly consolidation, anything above 199.71, just looking for a weekly higher low for potential continued trend expansion here in the context of this gorgeous weekly uptrend. The red flags only happen, guys, if we lose that 199.200 level on the weekly. Then we could be revisiting here, guys, the mid 190s, which would be really the lower end of this huge prior area of resistance, which is now going to be decent support for the bulls. So looking very good. And to the upside, obviously your resistance level is still the highs that we just touched, right around the 210, 211 area. It was huge support in the past. Then it became resistance and now still acting as resistance. So very possible that the bulls are just accumulating in this bottom area, giving themselves a bit more momentum to finally crack into that zone, because it's a very big zone to crack. Going to need a lot of volume to do that. And you're also going to need broad market participation to do that as well. So that's probably going to happen, guys, when SPY and QQQ can start putting, back-to-back +1, +1.5% days in a row. And we just really haven't had that in the last couple of weeks, right? The market's just really too flat, to warrant any significant IWM breakout. Now, moving on to the Dow Jones lastly. So the Dow Jones getting hit today, 0.11% to the downside. That's because one of its components, Intel, was down about 8% on the day after their, they posted relatively weak internal guidance for their semiconductor division. It is a loss-leading division within the company. We'll take a look at that in the end of the video when I go over the trade ideas for Intel. But Intel being a component of the Dow Jones, it did weigh heavily on them here today. So 0.11% to the downside. Daily downtrend is underway. We were unable to break the double top here into lower lows. So daily downtrend is set at this point. Now, it is significant. Two things are significant. We lost the 12 EMA and we lost this previous area of resistance, which was now support. We're now under that too. So if the bears do get lower high into lower low, it'll be continued daily downtrend. And at that point, guys, we really have to watch out to this following low right here. 38,050 is going to be your most recent weekly higher low right here. If we were to lose this whole level, it's kind of like a range, right? So between roughly 38,400 and 38,100 roughly, that's going to be the zone that we cannot lose. It is your area of weekly higher lows. So I do believe the bulls are going to be able to find some support down there. You have your weekly 12 EMA as well. So far, just looking for some decent weekly consolidation. The few red flags that I was highlighting in yesterday's video is the fact that the Dow Jones, look at the MACD down here. It's looking a bit weak, isn't it, right? But even if the MACD goes red, we can just consolidate sideways and it'll just show continued weakening momentum. So this crossing over doesn't mean that we're getting this, right? It could very well just be sideways consolidation. It's going to cool this off, cool off the weekly RSI even more, and that would just be good for the market, would be best case scenario for the bulls. So that big zone right down here, guys, is going to be the fallback area for the bulls if ever we continue dropping the levels. Now to the upside, what do we need to see? Well, to the upside, you need to see a bounce that will be good enough to put us as close as possible to our previous highs right around the 40,000 mark. Give me a good bounce back above this resistance. It should now become support, get me back above the moving averages, and then most likely the bulls will be healthy enough to mount a daily uptrend recovery. Now, moving on to crypto really hasn't done much today, so we'll skip over that. Now let's move into our big tech names, shall we? So Apple on the day, Apple up about 0.5%, and they had some decent news towards the tail end of the afternoon that they were going into the home robotics industry. So look at this headline, Apple tests waters in home robotics after shifting focus from EV project. So those 2,000 employees that they, are repurposing from their prior and now defunct EV division, well, apparently those guys will now be working on home robotics, which is going to integrate very, very well with Apple's current ecosystem. So let's take a look at the headlines here. Apple is delving into the realm of home robotics, a venture that signals the tech giant's quest for the next breakthrough following the discontinuation of its electric vehicle project. So, according to Bloomberg, Apple's engineers are at the helm of two cutting-edge projects. One, a mobile robot that accompanies users around their homes. And number two, a sophisticated tabletop device with a robotic arm to reposition displays. Now, that's very, very decent. This development underscores Apple's ambition to deepen its penetration into consumers' living spaces by harnessing advancements in artificial intelligence and robotics. That's very good. Apple's foray into home robotics is a testament to its enduring quest for the next big thing, a journey that has been a hallmark of the company since the era of Steve Jobs. So that's very, very good, guys. Obviously, this is, a very, very young concept for Apple so far in terms of home robotics, but it's just good to see that the company is repurposing those employees, repurposing that R&D capital towards something that they're probably going to be a lot better at, right? You would love to see further integration with Apple home devices. And if they can do that, I really think it's going to do very well for the brand. So Apple finally, after all the negative headlines that we've had on Apple for the last 2 months, in the past couple of days, we've been getting some bullish headlines as a whole. The headline yesterday was that Apple was working on an augmented potential version of Siri, and they were using a model that was potentially technically faster than ChatGPT. So very curious to see about that development. We also had some bullish news last week that they were maybe reaching out to Google and or Microsoft for potential AI partnerships. That was also a positive headline. And now we have another positive headline of them potentially, testing the water of using AI and robotics within their suite of Apple home products. So that's very, very good developments for the company. It just goes to show you that despite all the negativity, guys, Apple is still building behind the scenes. Very, very, very good. Now, Apple on the day, let's get into the technicals here. Apple up about 0.5%, but the bulls really still in a, caught down here in this daily downtrend. So really no notable changes by the bulls just yet. So keep in mind, guys, we have started just like SPY and QQQ. We're trying now to reverse the hourly time frame. So if we can get some continued bullish momentum tomorrow on Apple, that would be a break of today's high, 170.65. If we can break that tomorrow, it will be new hourly uptrend, and it will be the start of a daily leg up. Now, how high do we have to get, guys? As close as possible to 173.57. Get me as close as possible. The bulls will create some space to maybe be able to set up for a daily trend change to the bulls, similar exactly to what we had back here. Bounce, set a new higher low, and then get a new daily uptrend underway. If they can do that over the next couple of days, it will look very, very good for Apple's ability to start retesting some of these mid 170 levels. But as of now, we are still towards the lows. Keep in mind, your last line of defense is down here at about the $166 range. And you can see how hard the bulls have really been fighting at this 170 area, right? Very, very, very good defense by them. So Apple looking good. We'll continue to monitor it over the next couple of days. If you're looking for the bullish momentum shift, just watch this hourly momentum into tomorrow. And then if that does continue for a few days, we need to watch how big is the size of this bounce to give ourselves the best probabilities of knowing if the bulls can set up the daily trend change. Obviously weak bounce and then roll over the hourly time frame, probably going for lower lows, and then we'll look to our last area of defense. But if the bounce is very decent, then the bulls have a very good shot at resetting to a daily uptrend and start attacking some of these higher 170 levels. So looking good on Apple. Nice story by them today. Nice little bounce. Let's keep it going. Now moving on to AMD. AMD really being flat over the past 2 weeks, and today's was no different, right? 1.16 to the upside, but still, guys, trapped down here. And that's no secret. We were trapped in this very same range all throughout January and February pretty much, and now we're kind of back within this range. So daily downtrend currently still in motion, right? The bears are in control and the bulls are looking to defend right here, the 172.16. Lose that and your daily downtrend simply continues, and then we look to our lower areas of support, which is going to be 164 to 158, the bottom end of that month-long range in Jan and Feb, and your previous all-time highs as well. So this area down here is a fairly significant area for AMD. So we'll see what the bulls are able to do in terms of defense. One thing's for sure, if we do swing down into the lower 160s, high 160s, mid 160s, it does open up a great trade opportunity for some short puts in the lower $160 range, because I'm pretty sure, guys, that if we get a move lower into this area, you will get a first time bounce when we do touch that area. A little bounce here, so a swing trade from here would be very, very juicy indeed. Now, what do the bulls need to do to regain control at this point? Well, we need to break the high of Monday. If we can break 186.66, it will start a new daily uptrend, and then we will be looking to take as much of this weekly move down back as possible to give the bulls a good shot here at resetting this into a new weekly uptrend. With such a heavy engulfing move to the downside, at this point, the V shape is highly unlikely. I would most likely be in tune to see a tightening range, maybe all the way until your earnings cycle right here, which is going to be the end of the month of April. So only about 4 weekly candles remaining, right? So if we can do something like this and consolidate sideways here, it may just give the bulls enough space to potentially, if they do well on earnings, reset into a brand new weekly uptrend. So as a whole, the bulls are still looking relatively healthy. My sweet spot for the trade is right down here, 164 to 158. Now moving on to Amazon. Give me a quick second, because Amazon is very exciting right now. So Amazon app up about 1% on the day today, 182.41. First time we've really closed the candle into the 182 zone, looking very, very good. But Amazon has been looking good now for a considerable amount of time, right? Really in a nice daily uptrend pretty much over the past 3-4 weeks at this point, and that just continues. So now we are finally starting to mount above these highs and finally starting to create some distance between us and the 178 level. The 178 level was significant, guys. Big previous resistance area in pretty much 2020 and 2021. So now that we're decently above the 178, I do expect the bulls to be able to start running with this and start attacking our areas of all-time highs. 188 is going to be the next target. Now, Amazon doesn't have earnings until the 25th of April, so I don't expect them to be able to really significantly crack above these all-time highs much before their earnings. But if we can get as close as possible and hover around there, if we can do, if we can get up to 188, just like we got up here, right? Kind of get right up to a big level and sit right next to it. If we can do the same thing and get up close to 180, right? Just get us a bit higher, close to 180, hesitate all the way until earnings, and then they smash earnings. That's when I believe you'll get a very juicy all-time high break. That would obviously be the best case scenario for the bulls, right? So all in all, full bulls in control right now. Daily uptrend, any pullback just going to be for a daily higher low, anything above 178. Fittingly, just going to be looking for a daily higher low for further trend continuation. And now that we're above the 178 mark, well, this area can be used as support. You also are above your moving averages too. So the 178 area looking like a very decent area of fallback to the bulls for some potential further momentum to the upside. Weekly also looking extremely gorgeous here, guys. No red flags, just continued trend expansion. So Amazon, one of your stronger names in the entire market, them, Google, and Meta, pretty much your strongest names in big tech right now. Now moving on to Google. Google with another stellar day, 0.32% to the upside, staying really close to your all-time high areas. No secret here, guys. Google is in a glorious uptrend right now. So any move lower at this point, if we do break down lower for XYZ reason, just going to be looking for a higher low, anything above 147.19, higher low for further trend continuation. Google is looking so good, especially on the weekly as well, guys. This was a gorgeous weekly downtrend by the bears, and the bulls completely engulfed it in one single move. The past 4 weeks have been very generous to Google. Extremely nice move to the upside, which is why even if we were to lose this daily downtrend, right? If for some much reason the markets just fall off a cliff in the next coming weeks, well, I do believe Google is set up nicely for a weekly higher low upon that consolidation, higher low for continuation. If we get that pullback on Google, guys, I'm going to be eyeing the 148, 146 level. If we can revisit that, I will probably be throwing leap call options at Google in this range, because at this point, guys, I really do believe that the all-time high monthly uptrend breakout is well underway, and Google should have a very nice year indeed. All the AI headline mishap that they had early in the year, I think that is now pretty much behind them. And now we will only have good things to come from Google, as management is aware that their brand image is extremely important when it comes to AI. So I don't think they are going to fumble any more news events or investor presentation days such as they did in the early part of this year. Now moving on to Meta. Meta looking very good today, guys. 1.88% to the upside, really creating some space off these lows. We were in jeopardy, guys, of losing the daily uptrend, right? So we had the daily uptrend. The bears came all the way back, and we're really jeopardizing our lows here at about 480. I was saying, guys, if we lose 480, we lose the daily uptrend, and you give the bears a shot at setting the lower high using this prior resistance, which was now support, use that as resistance and start losing the levels, right? But now, very nice recovery by Meta bulls here. Now the bulls are now back above our big line. This was the 490 range pretty much. And we're also back above our moving averages. So the bulls back in the driver's seat on Meta, that's for sure. Now we will look to the all-time highs pretty much. 515 range is going to be the next area we break. If we can break that, guys, your daily uptrend is maintained, and your weekly uptrend also is just maintained too. Take a look right here, right? Well, this one is a bit weird, so we have to draw it like this. Weekly higher lows at that point will most likely be set. We'll just be looking for a weekly trend higher. Meta has consolidated sideways since earnings, and that's a good thing, guys, right? We were able to cool down all of the hot RSI by consolidating sideways for a better part of the last 2 months at this point. So now, even though we're overbought, we're not all-time high record overbought as we once were. So Meta can now continue to expand to the upside, but I would be highly surprised if we get too much upside expansion here, much before their earnings, which are coming up in about the next 2-3 weeks time. Moving on to Microsoft now. Microsoft also not looking too bad, even though they did have a 0.23% day to the downside, right? We are now in a daily downtrend on Microsoft. That is, it's a daily downtrend, but is it very important? Not really, guys, because we have some huge support below us, right? So 415, that's going to be the top end of the range that Microsoft was stuck in, for a better part of the month of February right here. So that top end of the range is what we're going to be looking at for the bulls to get support at. That's going to be our first line. And if for every which reason we come back down into this range, well, all of this lower range here, guys, 400 down to about 398. This lower bound is going to be so juicy for buying opportunities. If we can get that before earnings, I may even make some call option plays if we do come down there, because there's really no red flags for Microsoft business as a whole. All we've had is pretty much a breakout above the range, and now we're consolidating sideways. The weekly chart really shows it best, right? So weekly uptrend, sideways consolidation, right? Resumption of the uptrend, sideways consolidation. Now we tried to break above and we're getting kind of stuck right here, probably because earnings is coming up quite shortly and traders just don't really want to run away with the stock much before we get that earnings information. As a whole, guys, though, it's still pretty much a weekly bull flag, right? Just two sideways, slightly down weeks, just a bull flag, just looking for a weekly higher low for further trend continuation. It looks extremely good. Nothing bad to say about Microsoft whatsoever. That's why I say, guys, if we come down to this range, could be a very juicy area for a trade. But I don't think Microsoft is going to come down there unless we really get a broad market sell-off. Microsoft probably not going to come down there. If the markets just maintain flat or just grind higher as they have been, then I do expect this upper bound to be really acting as solid support and the bulls to be able to mount a next leg up here, getting a little bit, short-term gains pretty much before earnings. I'm just not expecting this before earnings, but could we see a little break above here for the next couple of weeks leading into earnings? Sure, the technicals definitely would support that. Now, moving on to Netflix. Netflix with a very nice day of recovery, guys, 2.58%. Now, we were having a little bit of concerns on Netflix because we lost the 12 EMA, something that we had not lost ever since that most recent earnings report. So we were on the watch. Would the bears be able to convert this into a daily downtrend and send us into further weekly consolidation? Well, today pretty much erased that possibility. The bulls engulfing the entire move. Now, the bulls back here had lost the daily uptrend. They set the lower low, lower than this low right here, so they lost it. Now they have to regain it, but with such a nice engulfing move, they can really just engulf this, set the daily higher low, and then probably move. Keep in mind, we do have earnings in roughly 2 weeks' time, so I'm not expecting crazy upside for Netflix or even crazy downside on Netflix for that matter, much before earnings, right? So their earnings are going to be the 18th of April. Looking forward to that. As of now, the bulls pretty much back in the driver's seat. And on the weekly, guys, well, we never really lost much ground on the weekly as a whole. Just a continued nice weekly uptrend higher, still in this most recent leg of your weekly, right? So looking very good on Netflix. Nothing bad to say whatsoever. Just price action. Probably going to be a bit limited before earnings. Not really expecting all-time highs from there. But if they have good earnings, guys, 700 is definitely on the table for the bulls to go and get, because the company should be performing very good, very decent margins, a recapture of the free cash flow that they had been losing post-pandemic, and obviously expansion of their user base, everything moving in the right direction for Netflix. Now moving on to NVIDIA. So NVIDIA also not looking too bad, even though they were down 0.55%, right? NVIDIA has really been struggling for a better part of last week. I think people kind of forgot that NVIDIA could actually go down for more than 2 days at a time, because you haven't really seen it much in the past 3-4 months at this point, right? Usually it's just been considerably up, except for a few days here we had some red, few days here we had some red. This is probably the longest drawdown on NVIDIA that we've had in the past 3 months. But is it a bad thing? Well, not really. Yes, we are below the 12 EMA right now, but we haven't really lost the lows, guys. The lows are about at 854. If we were to lose 854, it does create the space for the bears to set the lower high into lower low conversion and just take a much deserved breather on this weekly chart, which is extremely overextended right now. We've already been consolidating for the past 2 weeks, and that's done wonders to bring down your weekly RSI. as well, right? So if we do continue consolidating downwards and even lose the daily uptrend to in the form of a daily downtrend, not that big of an issue here, guys. Just expecting a higher low, and personally, I'm looking between 800 to 750 to be a super juicy sweet spot. If for ever which reason we come down into that area, I will be buying some NVIDIA down in those lower regions, as I believe that the upside after that is very easily attainable towards the $1,100 mark. I would not be surprised if NVIDIA goes up there within the next 6 months. All in all, your bulls still maintain control. What we need to do is protect these lows, 852. You know, the bulls still have it in them to just recover this and just restart the bullish uptrend, right? But what we need from that, you need to see them recapture the hourly trend. We have not had an hourly uptrend ever since we've been consolidating now, guys, for the past 6 days at this point. So as soon as you see a new hourly uptrend on NVIDIA, potentially tomorrow, that would be a break of today's highs, 903, then you know the bulls are back in control. We're going to look at the size of the daily bounce, and it's NVIDIA after all, right? They can literally just engulf this move in 2-3 days if they wanted to, and nobody would even blink. So NVIDIA not looking too bad. One thing's for sure, come down here, 800 to 750. I'm definitely buying. Now moving on to Tesla. So Tesla up a little bit today, 1% after their, deliveries disaster yesterday. But, Tesla not yet out of the woods here, guys. Still in the context of an overall down push, right? So we lost the daily uptrend that we had right here. Now we've cut the lows once again. So now the bears have a chance once again to set the lower high into lower low and continue this daily downtrend. What do the bulls need to see to reverse this pattern? Well, we need to get as close as possible to 184. Get me as close as possible with this daily bounce to 184, and then you stand a chance at resetting the daily uptrend. Keep in mind, we have earnings coming up on Tuesday, the 23rd of April, so that will be noteworthy. I'm not expecting the bulls or the bears for that matter to really be able to move this stock considerably much before earnings. So before earnings, am I expecting a complete flush disaster on Tesla, flushing our last line of support down here at the 152? No. Am I expecting as well a massive rally up until the 200, 210 area? No, because the fundamentals just don't have that positive news behind them right now. So either or of those moves, probably unrealistic in my mind. So the best we can do here, guys, is before earnings, create enough space for the bulls that if ever earnings is a negative catalyst, the worst that can potentially happen is we retest these current lows around 161. The worst case scenario is obviously if the bears really take this down towards the lower part of the trend line right here and really set us up for the flush on earnings. If you're sitting at 152 prior to earnings, guys, I'm pretty sure that they are going to flush this level on the earnings, really clear out everybody's stop losses maybe that have them down there, and really start even filling this gap that we have from, literally a year's worth of earnings ago, right around the 146 mark. So just keep those two scenarios in mind for Tesla, but very happy to see that the bulls are starting to recover after the negativity, guys. We priced in prior to the deliveries, the market was pricing in about 5% impact from the news, so 5% up or down, and that's literally what we got yesterday, right? The stock was really down about 4.5%, 5% on the day, no more, no less. So that's a very good thing for Tesla. Now moving on to Palantir. Palantir down 0.09%, not looking the best, but we are coming up on my sweet spot. That's why I'm excited. So we are now in the context of a daily downtrend. We are also below this yellow line that I drew yesterday. It is overhead resistance. Your moving averages are going to act as resistance as well. So essentially what I'm looking for here is maybe a lower high, maybe using this area right here, 2317, up to the moving averages, 2360-ish, let's call it, right? Lower high into lower low, and then we get into the juicy sweet spot here, guys. So if we can get into the 2150 down to about $19, huge area of support, big area of previous resistance as well. So looking for the bulls to really play in this area and start playing good defense. Now, with our recent move in yesterday's trading, we did cut the weekly low. So if we do end the week, guys, below here, unfortunately, we will lose the weekly uptrend at this point. Flush these lows, weekly uptrend is lost. But is it a weekly downtrend? No. Weekly downtrend, you need to see lower high and then lower low. That would be a confirmed weekly downtrend. If we, for some which reason, guys, if we do get a weekly confirmed downtrend over the next couple of weeks, I will be heavily buying. Why? Who's in control here, guys? the monthly bulls have the last say, and they will most likely be buying these dips. If you come down into their sweet spot right here, right? Come down into it. We're going to get some heavy buy pressure, and that's when's going to be a great area to accumulate some shares and potentially ride them for another leg higher and start attacking this $27, $28 range. So Palantir, yes, on the short term is looking, not the best. However, it does represent a buying opportunity if you are a long-term bull. The weekly shows that this area is super juicy, and the monthly shows that this area is super juicy as well. So I'm personally looking forward to continuously play Palantir as long as it remains in these lower levels. I'll be looking to play short puts, $21.50 down about $19. Very nice, juicy spot to be buying. Now moving on to PayPal lastly. So PayPal up about 1% on the day. So they're doing a good job, but PayPal, keep in mind, we have lost the daily uptrend with yesterday's trading. So they cut these lows. Daily uptrend is lost. At this point, the probabilities do suggest that we are going to set a lower high into maybe lower low for continuation. All relies on the size of this bounce. Obviously, if the bulls bounce, 70, 80%, then they have a great shot at either engulfing this in a V shape or just resetting the daily trend in 2 steps. One thing's for sure though, if for some which reason it's the bear case scenario that plays out and comes back down into my sweet spot right down here, which is roughly, let's call it 63 all the way down to about $61. This is an area that I'll be looking to buy PayPal in. Now we're doing a very good job of maintaining some crucial levels. We are above the downtrending channel line. This is the most we've been above this downtrending channel line in the past 2.5 years. And we're also above this green line right here. The green line is your 200-day moving average. We have not been above that since 2021. So 2 big technical breakout factors are now in the bulls' favor. Also, we are in a new weekly uptrend too. So the weekly uptrend breakout is looking very, very good for the bulls as well. Nice weekly uptrend, just looking to set the weekly higher low. And that's why, guys, if we pull back in this area, the weekly moving averages are right here. Seems like such a juicy area to be buying this stock, right? For a potential next leg higher that could take us really into the $75 range. So that's where I'm going to be looking to play PayPal in the next coming, days and weeks if we get a further opportunity closer to, $63, $61. If we come down to this range, I'll be playing some short puts here, hopefully get assigned, and then we can really ride some of these shares up to 75 over the next coming weeks and months if it does take that long. One thing's for sure, PayPal value down here is very good, and the company seems to be doing a very good job of trying to turn around its business model for the better, trying to get back to growth and high profit and free cash flow margins. Their earnings are Thursday, the 30th of April. So that's pretty much everything that we had for your stocks rundown. Now, a few of the plays that I took here today, guys, well, one of them was Intel. So Intel was down about 8% on the day just because they reported something that they never do, as a matter of fact. So they reported pretty much their, they actually gave guidance for the upcoming announcements that's going to be on the 25th of April, 2024. And essentially the guidance that they gave was fairly negative in terms of their semiconductor business. So take a look at this one, guys. It's right here, right? So Intel recently revealed its initiatives to revamp its financial reporting structure, reflecting the company's transition to a foundry operation model. This is the same model that TSM runs. So very, very important model for them. Now, the problem with this model, guy, the problem with this line of business for them, watch this, right? In the adjusted financial statements post-reorganization, Intel disclosed a $7 billion operating loss in 2023 from the Intel Foundry unit. The loss widened from $5.2 billion in 2022. Now, the operating losses are anticipated to peak in 2024 and are projected to reach break even at some point between now and 2030. So this year is going to be the worst year for that line of business, their foundry unit, which is manufacturing semiconductor chips. Now, prior to this report that Intel released today, Intel did not divulge the different either operating profits or operating losses of this division of the business. So when Wall Street heard how much money they were losing on it, well, obviously the reaction was negative. Couple that with the fact that this is going to be one of their most negative years in that division. Well, that's why the stock pretty much had an 8% sell-off on the day. But what that did open up for us, guys, is something that I've been watching in last week's put option plays. It opened up the 38.5. So I was able to find the 38.5 strike for next Friday. There really wasn't much. Since it was on a Wednesday, there wasn't that much premium for this upcoming Friday. And I did find some decent juicy premium down here, guys, at 38.50 for next week. If Intel continues to drop tomorrow, you may be even be able to find better premium at a lower strike than me. Keep a watch on the 38s, guys. Intel down in this range right here. Start coming into your big previous resistance levels that should be acting as support. And those are really in the mid 38 range, all the way down to about 38. That whole green box for me on Intel, guys, is such a juicy buying opportunity, in my opinion. Big previous resistance here as well. You know, just a huge chop zone that the bears are going to have a heck of a time trying to get through. So I do believe it represents a great buying opportunity. Intel, with that news, already down 20% on the year. So that's why I went for it here, guys. Just went with 2 contracts at the 38.5s. The other trade that I took here today was Elf Beauty. So Elf Beauty, guys. Elf Beauty was another one that I love. You guys know it's one of my favorite brands in the entire market right now. It's obviously a cosmetics and beauty company, and they do most of their business on social media. So they don't have stores that are costly to maintain and run, such as other brands like Ulta Beauty. And the reason that Elf was down pretty much 12% on the day today was because of something that Ulta Beauty came out and said. So Ulta Beauty gave guidance prior to their earnings. So Ulta Beauty has earnings really in about 2 months' time, and they dropped 15% today. Why did they drop, guys? Well, look at the headline. Beauty slowdown reflects cracks in consumer spending. So makers of consumer goods have been bracing for a slowdown in consumer spending after a buoyant pandemic times. Ulta Beauty is now saying that the decline is happening faster than expected. The entire beauty category is experiencing weaker spending across price points and product segments, said the CEO Dave Kimball right here at the investor conference that they had today. Now, the retail chain is among beauty companies that reported strong growth in revenue and profits over the past 3 years as consumers stepped up the purchases of makeup, perfumes, and skincare items. However, things that are going on in our consumers' lives has led to a bit slower growth than we had anticipated in the category. So, guiding for lower growth, guiding that maybe times are going to get a little bit tough for Ulta Beauty's clients in the foreseeable future, may be starting to eat away a little bit of Ulta Beauty's profits. However, Ulta Beauty has a lot of retail stores that they need to manage. Elf Beauty does not. Also, Elf Beauty's product range comes in at lower price points for the average consumer. Elf really has the perfect niche of being able to offer decent quality for a very low price. And the reason that they can charge these low prices is because their operating expenses are super low. They don't have any stores, and most of their marketing is done via TikTok, right? So it's online digital media marketing and a lot of influencer referrals and whatnot, a lot of organic media marketing that goes on after their initial marketing push, right? So their operating expenses are really not that high. I love this company, guys. In terms of their valuation, well, at 200 is about a 2 peg. Now we're coming down closer to the 150 range. This is going to get significantly better. It's going to be in the 1.6 area, right? That's going to be extremely juicy for a company growing this fast. So I chose to write the 152 puts. I did this at the end of the day because I knew that this headline was really going to keep the stock pretty much battered down for a better part of the day. So I did this pretty much right around the turn of 3 o'clock. It dropped a little bit more on me in the last 45 minutes of trading, but that's okay, guys. When we were roughly at about 165, I chose to write the 152.50 puts for next week. And I got a good deal on those, guys. I got about $1.60 for them. So pretty much about 1% for next Friday at the 152 strike. Very, very juicy. Only slightly below that at 142. We have our 200-day moving average. And we're really coming up the last area of congestion of this stock at the 152.50 mark. That would represent some very decent sell-off from the highs, guys, about 31%. It's a company that I've been wanting to get more involved in recently as it kind of ran away from me in the earlier part of the year. So this sell-off is doing a great job of being able to get me back in to this stock here. I still have some long-term shares, but just in terms of trading, I really want to start trading this stock more aggressively because I do feel that if we get a sign down here, guys, this stock will most likely rally. I don't think it will be affected by a lot of your other legacy beauty brands that have physical stores. I really think that these guys, if anything, they'll just start taking more and more market share because they cater to consumers with low disposable income, right? Their product suites are really for people that just don't have that much money to splurge on beauty and makeups. And beauty and makeup, guys, as much as we would like to believe that it's a discretionary item, such as, meaning in times of recession when people don't have a lot of money, are people that need makeup, right? Whether it be women or men or whatnot, do you really think that they're not going to buy makeup anymore, even if times are rough? I highly doubt it, right? If anything, they start shopping for more affordable makeup brands with still a somewhat good quality. And that, for me, is e.l.f. Beauty in a nutshell. That's why I really like this company as a whole. So those are the few trades that I did take today. The other trades that I'm still looking out for here, guys, MELI, right? Mercado Libre, still love this. Look how it's holding my juicy area right here, right? If it dips below into the $1,400 handle, I'm definitely picking up a few more shares of this stock. And a couple other plays that I want to look into, guys. SPGI, they've really still been muted right here. SPGI still think that they're going to have a stellar year, still just looking for the monthly high or low for further trend expansion towards the all-time highs. Looking to build a position right here. And the last one off the top of my head, guys, Vici Real Estate, one of my favorite real estate companies in the game. They are also still in my sweet spot. A little bit more of a value play here. They do pay a hefty dividend, but I do believe that we'll be able to get back here once interest rates start declining. I do believe that Vici will be one of the better companies leading into a rate decline cycle. Could have some very nice upside, guys, even just to the top end of the range. You'd be getting about 20% at that point while collecting a juicy dividend. Nothing wrong with the company at all. So those are just a few of the names that I've been looking at. So hopefully you guys enjoyed the video. If you did, consider dropping a like. Consider subscribing to the channel if you're new as well. Would love to have you here. And as usual, if you have any questions, please leave them down below in the comments. I will see you guys tomorrow after the close. Peace.